This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
Buying a house, man. There are so many people who want to buy a house, the first-time home buyers, and they're all excited. And then they get that home, and they're like, oh my gosh, what did I just do? I now have to pay this payment next month, and the month after that, and the month after that, for years and years and years. But when you buy a house using a reverse for purchase, it's different, right, Liz?
Correct.
So walk us through, what does that look like if you were to buy a house with a reverse?
So I'm going to try to make it as simple as possible because people, I bring it up all the time and people are like, wait, you can buy a house using a reverse mortgage? Absolutely. So it came into play 16 years ago. It took an act of Congress for that to actually take place. And so I'll make it really simple. Let's say you have a borrower, a client who's looking to purchase a house. The loan amount is based off of the age of the youngest person who's going to live in that home, the current interest rate, and the purchase price. You plug it in and it's going to say, Mr. Joe, your loan amount for this house of $500,000 is we're going to give you $200,000. Okay, that's a loan amount that the bank, that's what their starting balance is going to be. You have to come in with the difference, the $300,000.
Mm-hmm.
And then you live in this home with no principal and interest payments.
So for example, let's say that somebody's selling their house. Mm-hmm. They are going to make, using your example, let's say around $300,000, mm-hmm. and they're going to buy that same $500,000 property, mm-hmm. right? So they're downsizing. Yeah. So now they can go in,
put in that $300,000 down,
and then the reverse will cover the difference. And so either you'll have $50,000 left over, or the reverse will just be smaller.
Correct. So
Reverse
I have
balance.
an example. I
let's hear
have
it.
a live one right
Let's
here.
do it. Yeah.
It's perfect. So I had a realtor call me a couple weeks ago, and he says, hey, I have a client. He has listed his house. It's selling. And he is approximately 65 years old, I believe. He is going to net $430,000 from his home that we're selling.
Very common.
Mm-hmm. Yeah. And so he goes, and he already has his eye on the next house, and the purchase price on that house is $460,000. And he goes, he is short, obviously, by $30,000 because he wants to buy it cash and have no payment. Which
is the goal. Everybody wants no payment.
Yeah, right? And he goes, so he's going to go into his asset portfolio with his advisor, and he's going to pull $30,000 out. And then once he buys it,
actually probably pull more than 30 depending on penalties, taxes.
Exactly. So he says, and then once he buys it, then I want you to go in there and do a reverse mortgage so he can take out the $30,000 that he borrowed from his assets,
mm-hmm.
and then he gets his money back.
Yep.
And I'm all, whoa, wait a minute, hold up. Why wouldn't you just do a reverse for purchase for him to buy the house instead of doing two separate transactions? So he goes, wait a minute, talk to me about that. So I said, here's what you need to know. Using the reverse for purchase, instead of him touching money from any investments, which would trigger a taxable event,
sure.
Why don't we I ran the numbers, and on that $460,000 purchase, he's going to come in with $443,000 from his net proceeds of that $430,000.
Uh-huh.
That's going to be the down payment. The reverse mortgage is going to lend him $136,000. Okay?
Wait, so how much is he bringing in?
$343.
$343. That makes more sense.
Yeah,
okay.
$343, and that includes the fees associated with the loan.
So he's coming in with, what is that, $87,000 less?
He's gonna have $87,000 to put away, left over from the net proceeds.
So I'll see you're repaying the $30,000 and I'll raise it to $87,000.
Absolutely.
Yeah.
Who doesn't want an extra $57,000 to put back into wherever they want for a better return on investment? Have it as a nest egg as an emergency fund, whatever. But he's like, oh.
So what are the taxes though on that reverse money?
Well,
the money that so he's getting some money for the reverse purchase, right? Oh no, it's saving him. It's saving him the 87
Yeah,
grand.
saving him the 87.
So he doesn't. So one, he's not even having to pull the 30 grand plus taxes out. He's saving on taxes. He can put it wherever he wants.
Yeah.
And
he's got $87,000 left over from the net proceeds that he can put away for a rainy day.
I love that. And you can do that. What's great about this is, and you've shared this on the last time you were on the show, you can actually do this with investment properties. So you can buy an investment property with a reverse. It doesn't necessarily have to be owner occupied, correct?
So if you're the reverse mortgage has to be done on the owner occupied home. So let's say you own it free and clear.
Okay.
Right? You are able, let's say your house is worth $1 million and you're able to borrow $400,000.
Okay.
You don't have to own a property in California because that's ridiculous. You're not going to find one yet.
Sure.
But you can buy a second home in Tennessee or Idaho or Oklahoma. Actually, you could probably buy two.
So you
there.
can take that 400 grand and put it down. You can either put it down and finance the rest, or buy it free and clear. As long as it's cash flowing. So that's how you could buy an investment property using reverse funds.
Yeah.
There's so many options here. Yeah. And you are in control. It's not the bank is in control. You are in control.
Still your home.
Still your asset.
But are there situations, explain the situations where a reverse mortgage would not work for you?
Liz kind of touched on it. So I actually sent her a client. I always send her the best clients. And I sent her somebody. And so I got this call from this woman. And she's like, I'm really nervous to talk to you. And I'm like, okay, what's going on? She's like, well, I'm hesitant to even tell you the property address. I'm not going to share any of that. But here's the situation. My mom got a reverse and she died. I'm like, oh no, that's horrible. When did this happen? Like 5 years ago.
Yes.
And she hasn't reported the death to the reverse mortgage company. Correct. So she's been living there technically illegally for years. And so if she wants that, and the problem is she wants the home. In order for her to get that home, I don't even know what she would have to do. But in order for that to have happened correctly, there should have been a trust in place.
And there's no trust.
And so then when mom had passed, if there had been a trust, everything would have been fine. But because
she would be able to do something with the home, but now she's not going to be able to because she can't afford it. And as soon as they find out that she's been living there for 5 years without making a payment, 30 days, you're out.
Yeah.
Like you have not stayed with the guidelines of what the heirs are supposed to do. Contact the lender, let them know what's going on. Typically they have a whole year, depending on what the market's doing, to get rid of that home. But in this situation, I told her, I said, you need to be prepared if and when that time comes, that as soon as the lender finds out that mom is gone, you're out. You're not going to have a whole lot of notice.
And so that house is going to have to go through, the estate's going to have to go through probate. And now there's 5 years of potentially fees and fines that need to get paid. And so to answer your question, Matt, as long as it's done correctly, to my understanding, there really isn't a downside to it. Unless here's
what I tell the downside.
Okay,
don't tell people, here's the downside. When people say, okay, why shouldn't I do a reverse mortgage? I'm like, it's not that you shouldn't. It's if it fits your need. If you're going to move in 3 years out of the home that you're doing a reverse mortgage on, don't do it.
Yeah.
Find a different option, because I'm going to be the first one to tell you, it is not a cheap loan. It is costly, and if you spread it out over 20 years life expectancy, it makes more financial sense to do it. But if you're we're just going to do this for 3-5 years, look at something else. And then the other thing is, if your legacy is to leave your home, your biggest asset, to your kids, then this is not the loan for you. Because if you do it, the balance gets bigger over time. Equity of the home gets smaller over time. So the longer the parents live in the home, the less equity there's going to be for an inheritance for your kids. So if you're banking on the home being the sole inheritance for your kids, and you'd rather let them live a better life when you're gone than you live a better life now, you have to make that decision on your own.
But it is a good argument of whether or not maybe your kids need the money right now. Maybe they're on the verge of some troubling, challenging times, or you want to enjoy the money with them,
Yes.
whether it's vacations or upgrades to something, and you want to enjoy that with them.
What if you have like debt, what if you need
there you go.
like in-house care, right? Now you're putting a strain on the family to pay for these services.
Good point.
When you're sitting on a mountain of equity that you can't monetize.
That's a good point.
So let's talk about what is actually happening in the industry right now. You talk about first-time home buyers, right? They want to buy a home.
Yeah.
I read an article where it is becoming harder and harder for younger generations to save up for that down payment.
Oh, don't get me started on that.
Don't get me started, okay?
Well, but let's think about it, because I have seen clients do this and say, you know what? We want to do a reverse mortgage. We want to help our grandkids or our kids get into a home now while we can still enjoy that home with them.
Love it. So let's talk about that when we come back from the break. We're going to leave them hanging.
You got it.
Back after this.
So my family and I, each night, we take a stroll through the neighborhood, my wife and my 3 kiddos. And recently we've noticed that there are 2 homes that have been on the market with signs in the yard for quite a while now. And we're just curious, why aren't these homes selling? We look up their information and what they're selling for, and we figured it out. It's probably because they're not working with Johnny Jennings and Made for More Realty. Because when you work with his team, homes on average sell faster and for more money than everyone else in our area. So if you're curious how Johnny Jennings and his amazing team at Made for More Realty can help you sell your home or purchase a home, just Google Johnny Jennings with Made for More Realty. Find out how you can get at least 3 cash offers on your home in as-is condition. So again, work with the best. Johnny Jennings, just Google Johnny Jennings with Made for More Realty, and get more for your home.